Hey, what's up traders? In this video we will check another part of my trading tool, which is called Scenttic. It's like a shortcut for the sentiment of the retail traders. So right now I will simply explain a couple of things what I'm looking for. Basically, we all know that most of the traders are losing in the forex trading. Why is that? It's because the big players, of course, needs liquidity, and the liquidity means that if someone buy, other one have to sell, and or the opposite. So basically, the retail traders are used to provide this liquidity to the big players. So they are, of course, the part of the markets, and of course I am a retail trader too, same as you, and most of us, we are retail traders. We of course are not the big players who trades the billions and billions, as the Trump says. So it's of course important to know what the parts of both sides are doing. We have the COT to watch the banks, which I have explained in the other video, and we of course have to know what the retail traders are doing, because as said, the banks are using them as liquidity providers for them. So we can watch these traders, these retail traders, on this indicator on my website, where we actually can click to the COT tab and the sentiment, and here we can see their positioning on the many pairs. So right now, for example, look to this, we can see which traders are taking the most of the longs on some pairs. So we can see on the Euro Kiwi there is 82% of the traders on the longs. We can see what is their volume, what is their average long price, average short price. I have found this years ago that this is very useful. These data are actually taken from the MyFX book server, and actually these data are it's of course not the data from the complete the markets, but which might you can say that it's not accurate, etc, etc. But I can tell you that mostly the thinking of the retail traders is the same in all the markets, because what mostly the retail traders are trading is what they and their style of the trading is mostly the same as they teach it in every book. So for example, as we have some support, so what the retail traders will do, you have the break, and they will tell you to enter the breakout or the retest, and what they tell you, they will tell you put your stop loss below the latest the swing, and look what happened. Boom, surprise, the price came exactly into here, and they took out their stop losses and reversed. Why they reversed as well? Well, for the same reason, because what happened in here, not only they took out the stop losses of those who entered here, but those who entered this breakout here, they have the stop losses in here, and they took these stop losses as well out. So basically the market makers algos are still hunting the liquidity of the stop losses, and it's always never ending the process. So look, for example, here the retail traders support, right? So they give them the reason to enter the longs. This is what I'm looking for. Basically, we can see some, some range. Then we can see the break of the support, right? So the breakout traders entering retracement. Then they show that the support is strong again. Why they do that? Because look, so now the one reason to enter the long, then another one, then boom, wow, this is really holding the support. This is the support, so let's go the long here, because look, 1 2 3 bounces, it's good. So let's put the stop loss here as it's shown in the average stupid book, and here is the stop losses. And what the banks they do, if the banks wants to buy, someone have to sell, and who's gonna sell? the people who bought here, they will give them their contracts which they entered here for the worst price, so they actually sell it to the so the banks force them by the hitting their stop loss to sell it to them, and then they have the liquidity, and look how sharply they start to move, and look where they go again. They as well go to the level where was probably the stop losses of those who took the shots, and again boom, they hit this level and they took it below this level. Why below this one? Because here was again the stop losses of those who take the long of this breakout, and it's still repeating process. They still hunting the new high, new low, new high, new low. So that's why I think that thinking about the classic support resistances is good, but you must do it in the opposite way than the retail traders are doing. And right now, look at this, what I have on my chart. So I have these two lines which are showing me the average entry price of the buyers and the sellers, and I can look at it like this into the history, and look what always is happening. So we can see that the banks always take the price against the majority of the traders, right? So we can see, for example, here what they've been, we will check this in the past how this happened, so it will help us to understand what actually must happen for the banks to load the liquidity, right? So they basically need a lot of contracts. So we can see, for example, in here there was a lot of traders. All right, so this was this corona thing, right? But look what happened here. So here we have been in this kind of the range. If you look from the, of course, the higher time frame, right? So we are in the range, and look what they are always doing. They're giving the win to the sellers. They give the win to the sellers again. But what they need to trap a lot of sellers in here, and then once that happened, they started doing in this, and then look here, 74% people was trapped in the sell, as they've been always drawing these things in here. So once they get into the 74%, they start to run the trend against them as they trap them. And how far they went, look where they did go. So these sellers in here, they had stop losses in here, in here, in here, and everything, all of these, the banks, they eat it. They even went almost above this one, right? And right now the process is repeating again. So we are right now again in this, we can see how we are in this range. And what they are basically doing, they keeping the most of the traders, let me make it more clear. So basically they keeping the most of the traders in the loss, because just the 31% of the traders is taking the longs in here. But look, they have their average price still above. Why? Because they entering the breakouts, right? So look what they did here. They entered the break, and they drop the price down, right? So this tool actually is helping me to know what the retail is doing, and I know that they're mostly trying to keep them both in the loss. So what's good for now to trade, and actually we have in my signal service the sell trade, where I was expecting, I actually did kind of the mistake as well. Of course, I'm just the human, so I thought that they will not go higher, but they did, and we have our sell trade something like this. Our stop loss was almost hit because it's just slightly above, and we are in this trade. Actually we entered somewhere here, because it was actually somewhere here, because what I thought is they already trapped and the price should be dropping, right? So they did it again on this manipulation and the price is dropping right now. So yeah, so this is how can I use it. And here is a couple of things which I have already find out, couple patterns. So let's look to some other pairs. I think and I'm sure that it was nicely to see. I had an amazing trade on the GBP Aussie. Actually, look what was happening in here. So look, they've been always in here doing these liquidity things, so they've been giving the chance to win to these sellers. So if you know this is happening and you can start to trade the buy limits, where to go, when to go to the buy, always when it breaks new low. Because why? Because always in here the new traders will enter the short and they need to be trapped, and they doing this and repeating always the new low long, new low long, right? Again here long, stop losses below here, boom, and they can go up. So this is how this helps us to trade. And what is happening actually right now, look what's happening. So we can see here was the 17% of the traders to the short side, which is pretty good. But look, once the banks they move it above, so above the average price, that means that the shorters are basically trapped. So they have their short right now here. So you know the situation where your trade is. For example, you enter it here and you are in a trap, right? And look how they don't give them the chance to enter out of the shorts. And look what's happening. The people are actually still taking the shorts. You see how is it growing from 30, 31, 34, and what right now I could think what could happen and how would I plan my trades is, look, so they've been winning here, now they are caught in the trap. So what I think could happen is to be this, and I can plan my trade like that. Because why? Because I think that they will not give them the chance to get out from their shorts. They are actually right now trapped, and I think that a quite big trend can start in here. And if we look to the COT, it would be confirming in here, because what we see here, -5, -8, and if we check the COT data and we go to the pound, if I remember this well, we can see slightly growth in the longs, but not that much. Net positions actually both -36, -24, -20. So net the positions are actually looking good, and the Aussie net positions looking good as well. So I think this could be the long, just based on the technicals. And based on that, the traders are pretty nicely trapped in this, if you look at it like this from this perspective. So we can see here was the liquidity loaded, right? So right now is the time to squeeze them properly, right? As we can see, it's always trying to go through all of them. So I think this indicator is as well really amazing, and it's giving me a lot of information. For example, here was the nice trade on the USD CAD as well yesterday. You see how as they trap them in here. Here was on the FOMC. I had actually the nice trade in here, and look how they now catched, as the retail traders are catched in the trap, and look, they never get a chance to get out. And what's actually happening, the number of the sellers is slowly growing, and you can see how they don't get a chance to get out from the trade. So it's other tool to help us understand. So here on the euro pound, it's the opposite side. Look at this. buyers trapped, and right now the price is dropping down, and we can safely have our stop loss above. So yeah, so this is for the retail traders positions indicator.